Bridging Trends. Brought to you by MT Finance. Bridging Trends contributors reported that a total of £166.3 million of bridging loans were transacted in the fourth quarter of 2022. While this is down from the £214.7 million we saw in Q3, it is still the highest Q4 figure since 2019, which came in at £180.9 million. For the second consecutive quarter, the portion of second charge bridging loans dropped, falling from 13.8% in Q3 to 12.9% in Q4, suggesting that more borrowers could be looking to move and purchase new properties instead of releasing equity in current assets. This is backed up by the fact that the amount of bridging loans being used to fund a regulated refinance dropped from 10% in Q3 to 9% in Q4, while unregulated refinance fell to 10% in Q4 from 13% in Q3. Demand for regulated products fell marginally in Q4 from 45.2% in Q3 to 43.8%. This could be due to seasonality returning to the market, although it's worth noting that it's still up on 2021's Q4 figure, which came in at 36%. The average monthly interest rate climbed again to 0.79% in Q4, up from 0.73% in Q3. While this is a rise on the 0.71% and 0.69% we saw in Q1 and 2 respectively, it is still relatively in line with Q4 2021, which was 0.77%. This shows that despite the impact of September's mini-budget, interest rates within the bridging industry have not fluctuated as dramatically as they have amongst high street lenders. The average loan-to-value fell from 59.6% in Q3 to 57.9% in Q4. This shows that amidst the cost of living crisis, borrowers were not overstretching themselves. The average term of a bridging loan remained static at 12 months. A combination of bridging's increasing popularity and continued pressure on industry professionals pushed up the average completion time from 60 days in Q3 to 66 in Q4. According to data supplied by Knowledge Bank, the top criteria search made by bridging finance brokers in Q4 was for regulated bridging, followed by minimum loan amount and maximum LTV. This is in comparison to Q3's top searches, which were expatriates, family gifted deposit, and finally, flats, not new build. After we saw the number of bridging loans being used to fund an investment purchase plummet by a third to 16% in Q3, it increased to 26% in Q4, making it once again the most popular reason for a borrower to take out a bridging loan. In contrast, preventing a chain break fell from 22% in Q3 to 15% in Q4. The latest Bridging Trends figures show that as average interest rates continue to rise amongst high street lenders, investors and homeowners alike turn to the specialist finance industry to help facilitate property purchases, prevent chain breaks, and fund refurbs. Bridging Trends.